Welcome to the Hodges Yearly Market Wrap for 2011. It's been an interesting year to say the least. With uncertainty in world economies, the Australian market has been watching closely, yet has been relatively unscathed. The Australian stock market showed the most volatility due to the uncertainty in the world economy, with the fluctuations the greatest in the second half of the year. The Australian All Ordinaries Index is down 12.5% year to date. With the Australian economy seen as one of the stronger nations in the world, the Australian dollar moved past parity with the US dollar and remains above $1 US. The dollar grew by 10% over 2011. The real estate market showed signs of decline throughout the year, with some areas suffering more than others. The measure that does not receive publicity is the auction success rate rather than the auction clearance rates. The majority of the properties that were passed in at auction were sold in a short period after the auction, sometimes for prices far greater than the vendor's expectations. The passiveness of buyers created an after-auction market which dominated the second half of the year. There was a definite drop in prices across the board, however statistically it is very difficult to put an exact percentage on that drop. The Reserve Bank of Australia showed caution for the majority of the year due to the inflationary pressures put on by the economy. As the inflationary pressures eased and growth slowed, the Reserve Bank reduced interest rates by 0.25% for the months of November and December, a move not seen since the global financial crisis. The great news is that the major banks passed on the full interest rate cuts. Economists are predicting more interest rate cuts in the new year. The rental market has shown signs of easing, with vacancy rates increasing slightly over the second half of the year. The rental vacancy rate has increased from an average of 1.75% over the last 12 months to 2.5% over the last quarter. This creates more affordable rental opportunities for the foreseeable future. What's expected for the real estate market in 2012? With economists predicting more interest rate cuts in the first half of next year and some stabilisation in the European markets, we are expecting more activity in the real estate market in the first half of 2012. Well, thank you for watching the final market wrap for 2011. I hope you've enjoyed the series and I look forward to seeing you next year. But please have a very Merry Christmas and a Happy New Year.